Welcome back to Finance Watcher. Today, we're looking at a story that most XRP investors are only seeing in pieces. One headline says Wall Street is increasing exposure to XRP. Another says nearly 95% of recent XRP liquidations came from short sellers. And another argues that Ripple's banking relationships may be one of the biggest advantages XRP has over many competitors. Individually, each story is interesting. But when you connect them together, a much larger picture starts to emerge. A picture that has very little to do with daily price action, and a lot to do with where XRP may be positioned within the next generation of financial infrastructure. So what exactly is happening? And why are institutions, traders, and analysts all looking at XRP from completely different angles? Let's break it down. Before we begin, a quick reminder. At Finance Watcher, our goal is simple. Every day, thousands of news articles, analyst reports, institutional updates, social media discussions, and market opinions are published across the crypto industry. Most investors never have time to go through all of them. Our job is to gather the most important information, connect the dots, and help you understand the bigger picture. We're not here to tell you what to buy or sell. We're here to help you stay informed. Now let's get started. If you've been following XRP recently, you've probably noticed something unusual. The headlines seem to be telling completely different stories. Some investors are bearish. Others believe XRP is quietly entering one of its strongest phases in years. Price action remains volatile. Sentiment remains divided. And social media is filled with debates about whether XRP is being undervalued or whether further downside remains ahead. This confusion exists because different groups are looking at different data. Retail traders focus on price. Institutions focus on exposure. Banks focus on infrastructure. And regulators focus on compliance. The result is a market where multiple narratives are competing at the same time. But sometimes the most important information isn't found in price charts. Sometimes it's found in positioning. And that's where our first story begins. One of the most surprising developments came from XRP derivatives markets. According to reports, nearly 95% of recent XRP liquidations over a 12-hour period came from short sellers. Think about what that means. A short seller is betting that price will fall. If enough traders become bearish at the same time, the market becomes crowded on one side. And when price unexpectedly moves higher, those traders are forced to close positions. This creates additional buying pressure. That process is known as a short squeeze. Recent market data showed exactly that type of imbalance. Now, does this mean XRP is entering a new bull market? Not necessarily. But it does tell us something important. A large percentage of active traders were positioned against XRP. And many of those traders were forced out of the market. Whenever that happens, smart investors pay attention. Because it reveals where market expectations may be wrong. And that brings us to our second story.
While traders were betting against XRP, institutional investors were looking at something very different. Recently, the SEC approved the listing of the T. Rowe Price Active Crypto ETF. What's interesting is that XRP received one of the largest allocations within the fund. Reports indicate XRP secured approximately 11.42% of the allocation, ranking behind Bitcoin and Ethereum, but ahead of several other major crypto assets. Now ask yourself a simple question. Why would a major regulated investment product allocate that much exposure to XRP? Institutional investors have access to research teams, risk analysts, legal departments, compliance officers. They don't randomly assign portfolio allocations. Again, that doesn't mean they're always correct, but it does mean they believe XRP deserves a meaningful place within a diversified crypto portfolio. What's even more interesting is the timing. This approval arrives during a period when many retail investors remain cautious. That's a contrast worth paying attention to, because history often shows that institutions and retail investors rarely move at exactly the same time. The ETF story doesn't end there. According to Ripple, XRP ETF products have already attracted substantial institutional demand. Ripple reported that XRP ETFs surpassed $1 billion in cumulative inflows and later exceeded $1.5 billion while multiple spot XRP ETFs began trading in the United States. Whether you're bullish or bearish, that's a meaningful development, because ETFs represent regulated access, and regulated access is often one of the biggest barriers preventing large institutions from participating in new asset classes. The easier it becomes for institutions to gain exposure, the larger the potential pool of capital becomes. Now, that doesn't guarantee price appreciation, but it does expand the potential investor base, and that's something long-term investors should pay attention to.
Now, let's discuss what may be the most important part of this entire story. For years, investors focused on XRP speed, low transaction fees, fast settlement, technical capabilities. But some analysts now argue that Ripple's biggest advantage may be something much harder to replicate: relationships. Specifically, Ripple's relationships with banks, payment companies, regulators, financial institutions, and enterprise partners. Think about it. Technology can be copied, features can be improved, competitors can emerge. But relationships built over a decade are much harder to recreate. Ripple has spent years building connections throughout the financial industry, meeting regulators, working with institutions, developing enterprise products, expanding globally, and positioning itself within conversations about the future of digital finance. Recent commentary from industry participants suggests that institutional adoption and banking relationships remain one of Ripple's strongest strategic assets. Now, critics will point out something important. Relationships do not automatically create XRP demand, and that's true. But relationships often create opportunities, and opportunities can eventually lead to adoption. This is where things become interesting, because these three stories are actually connected. Short sellers were aggressively betting against XRP, institutions were adding XRP exposure through regulated investment products, and analysts were highlighting Ripple's banking network as a long-term advantage. Those are three very different perspectives, but together they reveal something important. XRP remains part of the conversation, not just within crypto, but increasingly within discussions surrounding institutional finance, digital assets, tokenization, and payment infrastructure. That's a very different narrative than simply asking whether XRP will go up or down next week. The bigger question is whether XRP can maintain relevance as traditional finance and digital assets continue moving closer together. And so far, the answer appears to be yes.
So what happens if the bullish scenario plays out? Institutional adoption continues expanding. ETF inflows continue growing. Ripple strengthens relationships across the banking sector. Regulatory clarity improves. And market sentiment gradually shifts. Under that scenario, current prices may eventually be viewed as a period of accumulation, rather than uncertainty. The narrative changes. Confidence returns. And investors begin focusing on infrastructure and adoption, rather than short-term volatility. That's the bullish case. But every investment carries risk. The bearish case cannot be ignored. Institutional adoption could take longer than expected. Market conditions could remain weak. Competition within the crypto sector remains intense. And broader economic uncertainty could continue weighing on risk assets. Investors should also remember that ETF exposure and banking relationships do not guarantee future price performance. Markets often take longer than expected to recognize long-term developments. That's why smart investors focus on probabilities rather than promises. Outro.
What makes today's story important isn't any single headline. It's the combination of multiple developments happening at the same time. Short sellers are getting squeezed. Institutions are increasing XRP exposure. And Ripple's banking relationships continue attracting attention. Does that guarantee success? No. But it does suggest that XRP's story may be far more complex than many people realize. Now I want to hear from you. Do you believe Wall Street and institutions are quietly positioning themselves ahead of the next phase of XRP adoption? Or do you think the market is still underestimating the risks? Let me know in the comments below. If you enjoyed today's analysis, don't forget to like the video, subscribe to Finance Watcher, and turn on notifications. Remember, we're not here to tell you what to buy or sell. We're here to bring together news, market data, institutional developments, analyst opinions, and community discussions into one place. If you leave this video with a better understanding of the market than when you arrived, then we've done our job. Thank you for watching, and I'll see you in the next video.